Well, we can't have a middle class sharing the income with all the rich people. So you've gotten rid of the blue-collar class. It doesn't exist anymore. Go out to Detroit and try and find it. So functionally, let's say functionally, it doesn't exist anymore. So now it's time to take out the relatively comfortable white-collar guys that are making a decent living working for the corporations. Involving in that would be a peak in the stock market. Involved in that would be higher interest rates forced by the market, forced by a loss of confidence in the U.S. dollar, more so than a supply of treasuries for sale. Part of that would be the bail-in, because all of what the first two mentioned will uncover the bank's weakness in the black hole I told you about that's not accounted for, because the gatekeepers of accounting have declared it to be an accounting function that can be used. So after the great leveling, which should be 2014 through 2016, the BRICS, which have been accumulating gold and who have fundamentally better economies through the miracle of being able to bring people into a consumption function that up to now are peasants that had nothing. We're not consumers in any sense. This is the great miracle, where you bring in millions upon millions and billions of new consumers. That the fundamental strength of that equation is much greater than the real truth of the supposed economic recovery we've had in the West, where the BRICS go to a system where gold reflects the value of a currency, and the U.S. says, to hell with you, we're the U.S. dollar, we're not going to listen to you, no matter where the dollar is. In other words, with hubris. And then over the next 4 years, fall in line with the BRICS. The grease of the wheels of equity markets and the reason for why we have hyper liquidity. We don't have hyperinflation yet, but we certainly have hyper liquidity. You'd have to say all those trillions certainly don't sit in the modest category. So the stock market will find a value, as all stock markets have in the experience. There was a time when quite recently, when the finest index in the world was the Zimbabwe stock index. And so similarly, the real reason for equities being so strong is the subjective knowledge of what hyper liquidity means to general equities. But they all find a top. And when they do, the drop is spectacular. And the stock market is certainly, by all normal measures, quite a bit overextended. It will become more overextended. But then didn't I define infinity on QE as being the USDX at 70? So yes, tapering will take place, but it will take place because if you don't taper, the dollar will fall out of bed on its own by orders of magnitude. It's beginning to paint itself into a corner with its statements of what it will do. And the truth of the matter is it's better not to threaten, it's better to do if you really are going to. So the amount of threatening, I think, comes more from weakness than it does from strength. So I prefer not to think that that would happen. But of course, again, if you say you will only give them one more month, there's your red line. What are you going to do when the month ends? And if you forget about it and it goes away, you lose credibility. What's happened with all the red lines the U.S. has drawn and just walked away from? You lose credibility. And credibility speaks to confidence, and confidence speaks to gold. Gold would find higher levels because of what would happen to energy prices. I don't think it's something that would go up based on war like that. If it didn't spread, except between the combatants, would come back down. The change in interest rates would be the biggest problem the derivatives would find themselves in, since interest rate related derivatives are primarily make up this huge mountain of paper that the BIS has understated in size. And the next biggest derivative is derivative in currencies. And of course, currencies in combat would start flying all over the place. So I would say you'd basically have to have a holiday in trading all derivatives because it would be impossible to trade them. The bids would not be there. Absolutely, the system can melt down because it's nothing more than feel-good news, camouflaging very difficult situations, and it's too many holes in the dike at the same time, from food stamps to then currencies. I mean, the only reason you don't have bread lines today is because of food stamps. If half of the Americans are on food stamps, can you imagine if half of the Americans legitimately don't have food? Trying to better 1650, which is the pendulum point for gold. It will better 1650 and will rise to 2400, drop, and then rise to 32 to 3500 before we go into the Great Reset. I think gold has a life of its own, and I think it has participants of its own. And my calculations for the price of gold are made without a world turning towards gold as a primary investment, but rather with those that normally are associated with gold losing their fear of the marketplace. That's been engendered by a manipulation that's taken gold from 1900 to slightly lower than the present levels, which seems to have bottomed. Gold, emancipated, physical gold, emancipated from paper gold, the formation of these new exchanges in which I'm involved. The result will be physical gold at $50,000 an ounce. Up to 2016 and 2020, when the Great Reset actually involves the West, the prediction on gold is 32 to 3,500. When gold is emancipated, it's 50,000. The reason for the confiscation of gold back in the 1930s was gold was QE. You had to have more gold to manufacture more currency. Now that doesn't exist. So if you're concerned that that gold will be confiscated, then what you're saying is you're going to be punished for being correct in the marketplace. I don't believe gold will be confiscated. Windfall gains tax, when gold is emancipated and goes to outrageous prices, yeah, windfall gains tax of some degree, but not 90%.